pursued her LLB degree from 92 to 95 from Campus Law Center, Delhi University. During her practice as an advocate from 29th day of November 1995, she was leading cases in civil side, and from 97, a number of cases have been reported in various law journals. Considering her experience in the field of taxation, the state of Jharkhand, by way of special engagement, nominated her to represent the state with analogous cases challenging the provisions of Jharkhand Entertainment Tax Act 2012. She has also represented Union of India in various tax matters after being appointed on 3rd day of March 2015 as Central Government Counsel for appearing in Jharkhand High Court. She was in the panel of NBCC India Limited, a Government of India enterprises, and appeared for the company for tax matters. Her ladyship was also a panel lawyer in Oriental Bank, Bank of Baroda, Central Bank, Union Bank, and Allahabad Bank for a long time. Her ladyship was nominated as a lady member of Jharkhand State Legal Services Authority. Her ladyship has also participated in a project of access to justice by poor and disadvantaged people and has been appointed as amicus in many PILs on bonded labor and condition of toilets in educational institution, college, hostels. Her ladyship was also appointed as a member of independent committee to inquire into the complaint made by a student of National University of Study and Research in Law, Ranchi, in 2015. Her ladyship was founder member of Jharkhand High Court Middle Income Group Legal Aid Society. Her ladyship has been elevated as a judge of Jharkhand High Court on 6th January 2018. Her ladyship has decided a number of first appeals, second appeals, probate cases, company petitions, arbitration matters, including appointment of arbitrators, criminal matters, including those related to Prevention of Corruption Act, etc. From June 2020, her leadership is sitting in division bench, leading matters relating to taxation as well as commercial appellate divisions. Arising from administrative tribunal accounts for setting aside on 9 August 2020. Her ladyship is a member of Juvenile Justice Board formed by the Honorable Supreme Court and has done far-reaching work in this field by visiting observation homes, children's homes, etc. even in this COVID-19 situation. मैम का ये बहुत थोड़े समय में जो समय का एक अभाव है उसमें मैं जो मैम का इंट्रोडक्शन दे पाया, अगर इसे 2 शब्दों में मुझे कहने को कहा जाता तो मैं ये कहता लर्नेड लेडी जमशेदपुर, अजमेर और सीकर ब्रांच की तरफ से बहुत बहुत स्वागत है और आपका मैनेजमेंट कमेटी हार्दिक आभार प्रकट करती है कि आप पधारे, आपने हमें सुनने का अवसर प्रदान किया। धन्यवाद। Over to Harpreet.
Thank you so much, sir. I request you, ma'am, to please address the gathering.
Namaskar to all of you. Respected Chairman, Central Indian Regional Council of Chartered Accountants, Shri Nilesh Gupta ji. Chairman, Central Indian Chartered Accountants Students and Association, Shri Abhishek Pandey ji. The key speaker of today's program, Shri Dipendra Mohan ji, Chairman of Jamshedpur Branch of Chartered Accountants Students Wing, Shri Siddharth Khandelwal ji, Branch Chairman at Jamshedpur, Shri Vikas Agarwal ji, Shri Rahul Jain, CICASA Chairman Ajmer, Shri Arun Bhaskar, CICASA Chairman Sikar, Senior Advocates including Shri Satyanarayan Khandelwal ji from Jamshedpur, and many other dignitaries whose name I do not remember, but they are great people working in the field. They are chartered accountants, maybe advocates also, who have joined this program. My dear students of chartered accountancy, for whom the present webinar has been actually organized. First and foremost, I must thank the organizers of this program who have invited me to be a chief guest of this webinar. It gives me a great pleasure to be here in this webinar and connect myself to various dignitaries as well as the students of chartered accountancy who are the future of our nation, particularly in the field of economic development of our country. The topic, issues in tax audit and changes in ITR returns, is indeed a topic which touches upon the life of a number of taxpayers. Students, learning is a continuous process, irrespective of the fact where you are and who you are. It is an endeavor for me also to learn through this program. Through studies, we acquire knowledge, and through its application in practical life, we acquire wisdom, which ultimately enlightens oneself as well as the people around us. Wisdom can never come without any knowledge. At this stage of life, the students are required to acquire knowledge. And in modern day, during pandemic, modes of acquiring knowledge has taken us to an altogether different level, and the mode of knowledge gaining and knowledge sharing. It is only due to this webinar that we all can connect to each other and participate in such a knowledge acquiring webinar. Today's discussion are in connection with the hot topic of the day, that is issues on tax audit and changes in ITR. Will certainly take all of us to a different level of acquisition of knowledge, which Sri Dipendra Mohanji, the key speaker, and will also enable us to critically analyze the provisions of the recent amendments made in law. Any amendment in law is required to be examined in the light of the intention of the legislature. The intention of the legislature is certainly embedded in the amendments in law. First and foremost, we need to understand as to why such amendment has been made. The tax law broadly has two aspects. This I'm sharing you from the point of view of the constitution of our country, that all the tax law all over the world has got two aspects. One is the substantive law and other is the procedural law. The Constitution of India, our constitution, Article 265, it clearly states that no tax shall be levied or collected except without authority of law. You see, the procedural aspect of collection of tax has also been given so much of importance that it is specifically included in Article 265 of the Constitution of India. Merely making a substantive law is not sufficient. The procedure to collect the law is also required to be clearly laid down. And in absence of proper procedure to collect law, the law does not survive so far as the taxation is concerned. So I'm sure that the learned key speaker of the program will touch upon all the aspects of the matter in great details and would also discuss the intention of the new provisions, the corresponding amendments made in various sections or insertion of the new provisions, the mechanism involved to give effect to those provisions, as well as practical aspects indicating the bottlenecks of contemplated hardships in the implementation of such amendment. This kind of discussion, you see, there could be a perceived bottleneck in implementation of a particular law. But in this kind of a discussion, it could be clarified that no, this is the bottleneck. Actually, this is the bottleneck, or it is a misconceived notion that this is the bottleneck. And after this kind of deliberation that you have organized, I'm sure that whatever results comes up, it will go and churn in your mind, and it may also pave the way for future amendments in law. Law is a dynamic subject. The government is there to take care of every bottleneck, provided it is brought to the notice of the government and the legislature. So these kind of deliberations take us to a different level altogether, better understanding of law, such that there is better implementation of law. Plugging the modes of tax evasion is not only the responsibility of the legislature by amending the law, but it is also the responsibility of the authorities who are implementing the law, and also that of various practitioners in the field of law, which include the advocates and the chartered accountants. What I mean to say is that whatever the law is there, everybody, there is a shared responsibility. There is a shared responsibility that law is properly framed, implemented, and actually the persons who are the beneficiaries or who have to pay the law as per law are supposed to pay it. So this is a shared responsibility. We cannot simply say that it is the responsibility of the legislature and the income tax officers only to take care of the revenue collection. It is the shared responsibility of everybody. An endeavor should be made by all of us that no honest taxpayer should be harassed and no dishonest tax evaders should be spared. Such approach can only help us to build a robust economy. You see, what I feel is that if the honest taxpayers, they pay their tax properly, then the total tax burden on each individual will reduce. If we give our taxes properly and we do not evade any payment, then the collection which is targeted will be achieved. And you see the kind of tax structure we have, I'm sure, you see, even in the cases of GST, etc., we are finding that if the revenue collection, the compliances are increased, then under such circumstances, the tax burden on common man automatically decreases. So this kind of approach should be there from all corners. I'm addressing especially the students, because the entire nation is looking at the students with great hope and expectation. And I'm sure that their hearts is filled with commitment towards national development, which will take our country to new heights. One thing which I want to address is my experience with tax practice, which I would like to share. When I started my practice, I was basically practicing in indirect taxes. That is, the sales tax was my main field of practice initially. So at that point of time, there was a shift in the entire tax structure in the indirect tax, that VAT was introduced, right? So when VAT was introduced at that point of time, I was absolutely young and I picked it up. And I realized that it was an opportunity for the newcomers, because the old generation was not able to cope up with the VAT at that point of time. And thereafter, you see, now this GST has come. Now with the advent of this GST, I'm finding that those old generations who are not able to shift to GST compliances, they are, in fact, the students are in a better footing. You'll find that the students and the new entrants in the field, they are in a better footing so far as the compliances, etc. are concerned. So any amendment in law, I think students should welcome it, because they are the ones who will understand it better. They are the ones who will be in a position to ensure more compliances, and they will be technologically more savvy. And therefore, any amendment they need not fear at all. And I'm so happy to know that your entire organization has been paperless, and you have been doing this webinar and online courses, etc. for last 10 years. It's I had no idea about it earlier, but this is certainly, I am really delighted to know this. And this kind of learning process, I think that it should be introduced even amongst the advocates. Although they are also doing it, they should take a lesson from the chartered accountants, students, and they also should indulge in this kind of endeavor, because learning is a continuous process. And I'm sure that जिसके पास knowledge होगा वही सिकंदर होगा. मेरा तो ऐसा ही सोच. बाकी थोड़ी मोड़ी चीजें इधर उधर हो सकती है, लेकिन it's a fight for knowledge. And with this knowledge, when you gain experience, जो वट वृक्ष तैयार होगा आपका, उसका कोई मुकाबला नहीं कर सकेगा. एक चीज और मैं आपके साथ शेयर करना चाहूंगी कि मिस्टर पांडे ने बताया था मिस्टर अल्बर्ट आइंस्टाइन का वो सेइंग कि उनको लगता था कि टैक्स लॉ से ज्यादा कॉम्प्लिकेटेड, आइंस्टाइन को भी लगता था कि टैक्स लॉ से ज्यादा कॉम्प्लिकेटेड कुछ नहीं हो सकता है। मैं बताऊं ऐसा क्यों था उनके साथ? उनके साथ ऐसा इसलिए था क्योंकि ही वाज सो फोकस्ड ऑन हिज सब्जेक्ट कि उनको बाकी सब चीजें समझ ही नहीं आती थी। He was so focused in his subject. In fact, I don't know to what extent this story is correct. कि he had मैंने सुना था जब मैं कॉलेज में थी, क्योंकि मेरा बैकग्राउंड रहा है फिजिक्स, अपने प्रोफेसर से सुनती थी, तो उन्होंने अपने कारपेंटर को बुलाया और दीवार पे, वॉल का उनका दीवार था, पार्टीशन था लकड़ी का, उन्होंने उसमें 2 छेद करवाए। उनके पास 2 बिल्लियां थी, बोले एक मोटी बिल्ली के लिए, एक छोटी बिल्ली के लिए। उनको ये भी नहीं शायद स्ट्राइक किया कि एक बड़े छेद से तो दोनों बिल्लियां जा सकती हैं। He was so focused. उनका वो, he was known and famous for his focus. That is why he was so great. इसीलिए कोई भी काम के लिए फोकस्ड होना बहुत जरूरी है। बिना फोकस के कोई सक्सेस आप अचीव नहीं कर सकते हैं। आपके पिताजी चार्टर्ड अकाउंटेंट हो ना हो, आपके परिवार में कोई चार्टर्ड अकाउंटेंट हो ना हो, इसका बहुत ज्यादा इम्पैक्ट नहीं होता है। आई एम ए फर्स्ट जनरेशन लॉयर। मेरे खानदान में भी कोई लॉयर नहीं था जब मैंने इस प्रोफेशन को ज्वाइन किया। तो मुझे ऐसा ही मेरा एक्सपीरियंस है कि ये कोई जरूरी नहीं है कि आपके परिवार में कोई लॉयर होंगे तभी आप जज बनेंगे, या आपके परिवार में कोई चार्टर्ड अकाउंटेंट होंगे तभी आप बड़े चार्टर्ड अकाउंटेंट बनेंगे। नॉलेज इज पावर, और सारी की सारी दौड़ नॉलेज की ही है। तो स्टूडेंट्स से मेरा विशेष अनुरोध है कि इस प्रोफेशन में जरा भी ना घबराएं। इनिशियल जो सिचुएशन होता है इस किसी भी प्रोफेशन का, वो बहुत टफ होता है, और वो टफनेस, वो जो उनका वो जो सफर है इनिशियल 10 डेज का, that period of 10 years का, 10 years का, those people who are able to cover this 10 years with honesty, they are the persons who will lead the nation. So with this, so far as the main topic is concerned, the main speaker is there to address all of us. We'll learn from him. And the basic duties I have already indicated. Mr. Abhishek Pandey had told me that some constitutional aspect is to be taken care of by me. So basic duties, and Article 265 is the keynote of the entire taxation. With this, I wish you all the best for this webinar. And I'm sure that the students will take our country to new heights. Let us not stop till our goal is reached. With this, I would conclude. Jai Hind and Namaskar to all of you. Namaskar.
Thank you so much, ma'am, for your motivating words. We're extremely delighted by your wonderful words. Thank you for your presence today. I would now request Ms. Molly Khandelwal from Ajmer branch to please introduce our speaker, Sri Dipendra Mohan sir.
A very good evening to everyone. I hereby take the pleasure in introducing Sri Dipendra Mohan, our honorary speaker today. Sri Dipendra Mohan, aged 49 years, is a member of the Institute of Chartered Accountants of India, holding certificate of practice. He is a science graduate from Agra University and qualified as a chartered accountant in January 1995. He is in practice since 1995 as a partner of Messrs. S.N. Gupta and Company, Agra, which celebrated its platinum jubilee year in 2007. He has also done diploma in Information System Audits in September 2002. He has been a member of Regional Direct Tax Advisory Committee of Central Board of Direct Taxes, and also a member of Uttar Pradesh Self-Finance Independent School Fees Regulatory Committee, which regulates fees of schools in Uttar Pradesh for Agra and Kannauj districts. He is a nominated independent advisory board member of Minimum Wages Committee under the Ministry of Labour and Employment, Government of India. Mr. Mohan has special interest in the fields of taxation and audit with emphasis on taxation of charitable and education institutions. Mr. Dipendra has made various presentations and has presented papers in the fields of taxation, accounting, corporate governance, limited liability partnership, etc. at various seminars organized by the branches of ICAR, ICSR, Income Tax Department, various trade bodies, etc. He has attended various seminars and conferences relating to the profession. He has made presentations before the Honorable Finance Minister, State Finance Minister, Union Revenue Secretary, CBDT Chairman, GST Commissioner, etc. at various forums. Mr. Dipendra belongs to a family of chartered accountants. His grandfather, late S.N. Gupta, chartered accountant, established himself in practice in 1932 as the first chartered accountant in Western Uttar Pradesh. His father, Mr. Ram Mohan Garg, is also a chartered accountant practicing since last 52 years under the banner of Messrs. S.N. Gupta and Company. He is also associated with many social and charitable institutions like Agra Development Foundation, Agra Business Forum, Help Agra, Gaushala, etc. I thus warmly welcome C. Dipendra Mohan. Thank you, sir.
Thank you so much, Molly ma'am. I now hand over the further proceedings of the webinar to CA Arun Bhaskar sir, SICASA chairman of Sikar branch. Over to you, sir.
Thank you, Harpreet. Special thanks to Honorable Justice Srimati Anuba Raut Madam, Nilesh Gupta sir, Abhishek Pandey sir, और विकास अग्रवाल सर, साथ ही साथ दीपेंद्र मोहन सर, थैंक यू। आज की सेशन में सबसे इम्पोर्टेंट जो एस्पेक्ट है वो ये कि आज से कुछ समय पहले तक, लगभग 5-7 साल पहले, बजट में जो चेंजेस हो जाते थे वो कंटिन्यू पूरे एक साल तक रहते थे, बट इन रिसेंट ईयर में हम लोगों ने देखा है चेंजेस रिसेंटली होते रहते हैं, एक फर्दर गैप की भी जरूरत नहीं होती। आज नोटिफिकेशन आया, नेक्स्ट डे सर्कुलर आया, तो हम लोगों को अपडेट रहना जरूरी है। इसके लिए आज का सेशन हम लोगों के लिए बहुत ज्यादा इम्पोर्टेंट है, स्टूडेंट्स के लिए। मैं दीपेंद्र मोहन सर को इनवाइट करूंगा कि वो आज का सेशन कंटिन्यू करें। दीपेंद्र मोहन सर।
थैंक यू अरुण जी। ऑनरेबल जस्टिस अनुभा रावत चौधरी जी, ऑनरेबल सीए नीलेश गुप्ता जी, CIRC चेयरमैन, CA अभिषेक पांडे जी, CA विकास अग्रवाल, and other office bearers of Jamshedpur, Ajmer and Sikar branch. Ma'am, it's indeed a very good opening comments which you made and which really motivated all of us for this seminar today. Your words that wisdom cannot come without knowledge. It's really very apt for today's seminar, as the SICASA students are there, and I in my deliberation would like to tell them as to what the tax audit report is and what all changes have been there, so that when they are doing the audit of a particular client, they are able to keep those changes and those issues in tax audit report to the fore. And also the recent changes which have come in the income tax return form, which the SICASA students and the future chartered accountants have to keep in mind while deliberating and while making the returns and while doing the audits for the auditee. मैम ने एक बहुत अच्छी चीज स्टूडेंट्स आप सबके लिए बोला कि जैसे एल्बर्ट आइंस्टाइन फोकस्ड थे अपनी सोच में, उनमें जनून था कुछ करने के लिए, ऐसे ही अगर आप फोकस्ड रहेंगे, so I feel there is no way you can be stopped from becoming a chartered accountant. Yes, chartered accountancy course is quite difficult, but if you are just focused into it, you can achieve chartered accountancy course in a record time, and you can become worthy chartered accountants for the nation. With these opening remarks, I would dwell upon the issues in tax audit before this August gathering today. Friends, as we all know, tax audit is basically bread and butter for a chartered accountant. Why so? Because when we do the tax audit, the income tax department through the Central Board of Direct Taxes has put in us onerous duty on the chartered accountants कि when they audit the accounts of the client, whether it's a proprietorship, whether it's a partnership firm or a company, that they bring out the facts and bring out what all disallowances are there, what all points have to be pointed out in their report in Form 3CD. And that is why, students, today this Form 3CD is very important for us. As we all know, tax audit is divided into two reports. One is Form 3CA and the other is Form 3CB. In tax audit, we have to certify the true and correctness of the particulars in Form 3CD. I think the students would well appreciate the difference between true and fairness, whereby the financial statements are certified to be true and fair, and the particulars in Form 3CD, where they are to be certified as true and correct. देखिए, जब फाइनेंशियल स्टेटमेंट्स बनते हैं तो आप उसको ट्रू एंड फेयरनेस पे उसको जज करते हैं. फेयरनेस, बाय फेयरनेस, बिकॉज फाइनेंशियल स्टेटमेंट्स कैन नॉट बी ट्रू एंड करेक्ट. फाइनेंशियल स्टेटमेंट्स में जो बैलेंस शीट आप बनाते हैं वह काफी जगह आपको फेयरनेस यूज करनी होती है in terms of that you have to estimate, you have to take the provisions, estimates are to be there. So that is why the words used while we audit the financial statements are true and fair. But when we certify the Form 3CD in Form 3CA or 3CB, the words and the certification which we use is true and correct. Why correct? Because the particulars given in Form 3CD have to be correct. They cannot be just fair. They have to be correct. That is, they have to be conclusive. You have to give the conclusive evidence which the income tax department is wanting from us. And that is the onerous duty which we have today, that we should show what is the true and correctness in Form 3CD. Now, as we all know, the tax audit is becoming more of a transaction-based audit. Why transaction-based audit? Because the government wants from us in our audit report that we certify that whether there is any disallowance or additions to be made under Section 222E, under Section 14A for exempt expenditures earning for exempt income, for Section 40A, where disallowances have to take place, under Section 48(3), where cash payment in excess of 10,000, if it is debited in my books of accounts, I, as the auditor of the concern, have to bring out and point out those facts where any cash payment has been made above 10,000 rupees, so that that amount is disallowed in the computation of income. So now what is happening is that after the tax audit, when the computation of income is made, these disallowances automatically go. So also we have to bring out what all payments we have made to relatives, so that the assessing officer can work out their arm's length transaction cost in Section 48(2)(b). Section 43(b) deals with disallowances where government says duty, etc., interest to banks, PF, ESI, which have not been paid before the due date of filing of the return. then there are certain amounts which we have to quote under section 56, which have to be added to the income of the assessee. We have to point out any infringement in provisions of section 269 SS, whereby when the assessee takes a loan exceeding rupees 20,000, repayment of loan exceeding rupees 20,000, these all compliances have to be made by us as chartered accountant, and more importantly, by the students who are pursuing this chartered accountancy course. Why students more particularly? Because dear students, you are our eyes and ears for the auditee. आप जब उस auditee का audit करते हैं, when you are doing the audit, we are doing the vouching, you are preparing the financial statements, you are going into these transaction based transactions, and from these transactions you curl out these disallowances, these observations, these things which have to be pointed out in the tax audit report. So it is very, very important for you to understand. जैसे मैम ने कहा कि आइंस्टाइन साहब focused थे. So when you are doing the audit, you have to be very, very focused कि हमको form 3CD में क्या particulars mention करने हैं. In my later part of my deliberation, I'll be showing you form 3CD and discussing it point by point. Then we have a major impact on chapter 17B, which is for TDS compliances. So dear students, when we are doing the tax audit, आपको जो tax audit report form 3CD में है, उसमें जो points पूछे गए हैं, you have to clearly and efficiently curl out those points from the accounts, from the financial statements, from the visit of yours to the client's place accounts section, and mention it in the audit report for the chartered accountant, for your partner, for the senior person to finalize it. Then friends, as we all know that the income tax has devised certain accounting standards, and the Institute of Chartered Accountants of India has also come out with publications on accounting standards which have to be followed by the business community. Now they have to be followed even by a proprietorship or a partnership firm. As we all know that companies have to mandatorily follow these accounting standards while making their financial statements, because these financial statements are part of the Companies Act under accounting standard rules. But there is no such statutory liability for partnership or proprietorship concern. There, it is the onerous duty casted upon the chartered accountants that by the Institute of Chartered Accountants that they have to follow these accounting standards and to see that the accounts are prepared as per the accounting standards, so that there is a uniformity in the accounting of all persons concerned. Now, for the tax audit, I had curled out certain issues which I would like to share before the students here, as many times they create problems for us and for our understanding. In case of day traders and speculators, when we do the tax audit of people who are running share trading business, a problem which comes up is as to what has to be their turnover. Whether when they are dealing in futures and options, whether the entire amount of future has to be their turnover or just the difference has to be their turnover. In futures, for better understanding, I'll take an example. Future होता है जब आप suppose you sell 250 shares of Reliance, you buy one future lot. Futures are always in lot. So if you buy one future lot of say Reliance Industries, it is of 250 shares, and say the rate of Reliance today is 2,000 rupees. So one lot would be for around 5 lakh of rupees. तो आपने एक लॉट रिलायंस फ्यूचर्स का 5 लाख रुपीस का खरीदा और 5 दिन के बाद उसको 5,10,000 रुपए में बेच दिया. That means you earn a profit of 10,000 rupees. So what would be your turnover for the purpose of tax audit? Because tax audit has limits of turnover. 1 crore is the limit for a business person to have its accounts audited. So अगर हम 5 लाख का turnover ले लेंगे, so that would be exhausted within a few transactions only. So the Institute of Chartered Accountants have come up in their guidance note at para 5.14 sub para A that for speculative traders, for future option traders, you have to only take the difference which is there between a transaction. जो 10,000 रुपए का जो प्रॉफिट का डिफरेंस आया, that would be turnover, not 5 lakh or 5 lakh 10,000. And if there is a loss, say he buys a future of Reliance again at 5 lakh of rupees and then he sells it off at 4 lakh 90,000, then 90,000 490 में जो उसने बेचा, 10,000 का जो उसको लॉस आया, तो अगर हम ऐसे उसने 4-5 ट्रांजैक्शन किए हैं, so we'll have to take the absolute value of those transactions without considering the positive or the negative sign. That means अगर उसने 4 ट्रांजैक्शन किए हैं तो टर्नओवर उसका 40,000 रुपए होगा, ना कि 20 lakh of rupees. So I think I am clear on that aspect, which is very very important for us, because share traders के अंदर हम लोग इस aspect को काफी बार भूल जाते हैं या confusion हो जाता है, and we do the audit of tax auditors even when the absolute value of the plus and minuses is below 1 crore of rupees. So also for Kacha Adatiya and Pakka Adatiya, where the traders are there, when they do the work on commission agency basis, if they are doing it purely on commission agency basis, that is called Kacha Adatiya. There the commission only is to be taken as his turnover, and where he's doing on his behalf, that means he's buying goods and then selling it to the other person and keeping a small bit of profit, then he's a Pakka Adatiya. There the entire purchase and sale transaction is to be considered as turnover. That is, the sale transaction is to be considered as turnover. Friends, in case of builders, again, there is again a problem that in builders, the ICI in its guidance note has stated that even the advances received by builder has to be treated as part of turnover. Why so? Because the institute has come out with a guidance note on real estate accounting in 2012, whereby they say that percentage completion method has to be followed. So even in builders case, advances which they have received, that also has to be treated as part of turnover. For charitable institutions, if they are doing any business which is incidental to attainment of the main objects, and if the business turnover exceeds 1 crore of rupees, then they have to get their accounts audited only for the business unit, not for the entire charitable institution as such. Remember this, which is very very important, and that is given in ICI's guidance note at para 6.1. These are certain issues which were there for the turnover definition, because as we all know, when we have to do the tax audit of a particular entity, when the business turnover of an entity is more than 1 crore of rupees, tax audit has to be done. And there are certain provisos to it, there are certain exceptions to it, which are as follows: like if it is more than 1 crore but below 2 crore of rupees, and more than 8% profit is there for individual proprietorship, HUF or partnership firm, then also the tax audit is not to be done if it is below 2 crore of rupees and more than 8% of profit. And now the government has enhanced by seeing to the digital economy and seeing that more banking transactions have to be done. The government for last year had the limit of 5 crore of rupees of business transaction, where 95% of the transactions of incoming are through banking channels, and also 95% of the outgoings are also through banking channels, not in cash, just to promote the banking industry and the banking channels in our day-to-day working, just to disengage public people from having more cash transactions. That is the impetus of the present government, that we should have lesser cash transactions. Why it's so? It is so because when we have a cash transaction, we don't have a trail to that. When we have a transaction through the banking channels, we have a proper trail to that. It would be affected in our GST also for indirect taxes, as well as for taxation purposes, for income tax purposes, when the transaction is being routed through the banking channel. Whereas if the transactions at times are done through cash, both GST is mixed off and income tax is missed off. So that is why the government is more focused in bringing the economy through the banking channels and reducing the cash circulation in the economy. Now, for proprietorship, there are very many instances where a person is having a proprietorship and having two or more proprietorships in two or more different names. Maybe he has one office at Jamshedpur, another office at Ajmer, and the third office at Sikar. So if a proprietor is there, then we have to see the turnover of 1 crore of rupees or whatsoever for the entire PAN, that is entire 3 or 4 branches which he's having. Just like in the goods and service tax, we are having the turnover limits or the GST payable PAN based. So also in income tax, for tax audit purposes, it is PAN based, where the entire turnover for all the branches has to be taken care of. Now students, we move on to as to the two statutory forms are there for tax audit, that is form 3CA and form 3CB. Now you have to judge as to when form 3CA has to be used and when form 3CB has to be used. 3CA, as we all know, is to be used when the accounts of that client are required to be audited under any other law, like Companies Act, Limited Liability Partnership Act, so forth. So अगर कोई client है जिसके accounts किसी और law में audit होते हैं, then we are required to certify the tax audit in form 3CA, because in form 3CA we are certifying only then form 3CD. We are not certifying the financial statements. Whereas if the client's accounts are not audited under any other law, then we have to certify in form 3CB, because in form 3CB, apart from certifying form 3CD, which I will show you later on, we have to certify the correctness, the fairness of the financial statements in the form of balance sheet and the profit and loss account. So when we audit under form 3CB, we do the financial audit as well as the tax audit under section 44 AD of the Income Tax Act. Now friends, I'll be taking you to clause by clause analysis of form 3CD. As you all are students of chartered accountancy, so I'll be taking you to the clause by clause analysis of this form, whereby I think it is visible now, form 3CD. Form 3CD is visible?
Yes, sir.
Yeah. So this is the form 3CD, which is statutorily provided under the income tax rules, and it has been prescribed in rule 6G of the income tax rules as to how this form has to be filled up. And these are the particulars we as chartered accountant and you as student of chartered accountancy have to bring out the information from the client's accounts and the related documents, so that this form 3CD can be correctly filled up. Name of the assessee, we have no issues, but the issue comes up where proprietorships are there, because in proprietorship business, you are auditing the accounts of not just the assessee, but you are auditing the accounts of his proprietary business only, not his individual set of accounts. So even in an individual case, when we are doing the audit, at times there are occasions where he has personal other incomes, which we are not auditing, and we are auditing just his business set of books. So the name of the assessee there comes as proprietorship, proprietor being Mr. So-and-so. That is important. Address should be the same which he uses for the income tax return and which he has shown for the income tax return purposes. Permanent account number, we all know, is there. Whether the assessee is liable to pay indirect taxes, goods and service tax, if it is there applicable, generally it is there. You have to furnish the GST number. Now you have to understand that GST number, because it is state-wise, is different. So if your client has GST numbers in different states, which are being dealt with, either in the partnership or proprietorship or in a company, so all those GST numbers have to come. And you as students of chartered accountancy have to go onto the GST site to find out if the auditee has missed out certain GST numbers. And if he has missed out, please point it out in your working papers, which are part and parcel of your audit file, so that all GST numbers are quoted here. At the 5th clause, we have the status. Status could be individual, partnership firm, LLP, Hindu undivided family, private limited company or company. Previous years would be from 1st April to 31st of March. Assessment year relevant to the previous year. Then at 8th column, you have indicate the relevant clause under section 44AB under which the audit is conducted. That is, if the turnover is below 1 crore of rupees or the turnover is below above 1 crore of rupees, whether it's an audit of a professional you are doing under section 44 ADA and so forth. Now this new insertion has been made this year, clause 8A, whereby if the auditee has opted for taxation at a different regime under section 115 BA, BAA, BAB, BAC, BAD, whereby lower rate of tax is there, and if he has opted out, then you as tax auditor have to mention in your audit report that he has opted out for these beneficial taxation provisions. This can also be a point of debate. As to in the last seminar, this question was raised that if till the time of audit, we don't know whether he will opt for this. So the date is important, friends. The date on which you are doing the audit, up till that date, if he has opted for those schemes, those sections, well enough. If you have not opted, you can simply write no, would not be of a problem. Then we come to part B. If it's in firm AOP, you have to mention the partners sharing ratio, profit sharing ratio. And if there has been a change in the partners profit sharing ratio, then that has to come up in clause 9B. Nature of business is important to figure out as to what nature of business is there. And as we all know, when we fill up the tax audit form in 3CD online onto the income tax portal, then it asks us a code also. Friends, understand the importance of the code. Please, many times we see that proper codes are not figured out along with the nature of business or profession, and that leads to a lot of problem. I'll share certain problems which can be there, like in a wholesale or a retail business, different codes are there. So if you point out for a code for retail business in a trading concern and he is doing wholesale business or vice versa, then the income tax is having softwares whereby when the cases are picked up for scrutiny under CAS, that is computer assisted scrutiny selection system, then if the codes here are wrongly filled up or inadvertently filled up, then certain parameters are made by the income tax department, and based on those parameters, the income tax returns are selected for scrutiny. And if your code here is wrong, and if it is hit by that parameter, then the case of the client might be picked up for scrutiny. For example, parameter is there where huge deposit of cash is there in the bank account of the assessee. If he is into a retail business, then definitely cash generation would be there, cash sales would be there. If he is into petrol vending business, then cash receipts would be much more, or 90% of his turnover would be in cash receipts. And if you have inadvertently put in the code of, say, wholesale business, then in wholesale business, there is no occasion of having any cash transactions. Then there would be a mismatch between the code and the transaction which has been reported by the bank to the income tax department. So that would trigger a suspicion for the income tax department's software risk parameter analysis, and then the case might be taken up for scrutiny. So understand, just a very small minor mistake can lend the assessee into problem. So that is why, friends, we as chartered accountants, as our emblem is also very straightforward and correct in that regard, it's an eagle over there. So what is the characteristic of an eagle? It sits on the highest pinnacle in the building. It has the sharpest eye. So a chartered accountant has to have the sharpest eye and the sense, smell, and etc. etc. So we have to always have an hawkish eye on the financial statements of the assessee and curl out the figures and the points, clauses which have to be there in the tax audit report very correctly. Then moving on, clause 11A is there. Clause 11A deals with whether the books of accounts are prescribed. We have a particular section in the Act, section 44AA, which prescribes the books of accounts. So if the books of accounts are prescribed for the assessee's business, then we have to write the books of accounts. Because certain professions are only prescribed to have certain books of accounts. List of books of accounts maintained and the address at which the books of accounts are kept. Friends, this is important. The address at which the books of accounts are maintained has to also to be clearly mentioned. Why so? Because as per GST law, wherever the business transactions take place of the assessee, that premises would be covered under GST law. So when you have to bring out the GST registration details, you point out these business addresses and point out in your audit report here itself. They are also helpful for the income tax department to carry out at times survey proceedings. At times the notices have to be served. So those all have to be served. I would request the organizers, I think someone has barged into the webinar to see to it. I'll move further. We have to list out as to whether the accounts have been maintained on a computer system, and if they are so, that has to be mentioned by us in the audit report. And then at clause 11C, we have to bring out the list of accounts and the nature of documents examined by us. So here he says that we have to point out the nature of documents which we have examined. In the second clause, it was the accounts maintained, and what we have examined, we have to figure out in clause C. Then in clause 12, we have to figure out as to what all profit and loss, if it is there on presumptive basis under a section 44AD to 44BB, those amounts of profit have to be mentioned by us in the audit report. Then again, a very important clause, method of accounting employed in the previous year. As students of chartered accountancy, you know there are only two methods. One is the cash method and the other is the mercantile method. So whichever method is being employed, you have to mention it over here. And has there been any change? If the change is there, it has to be mentioned. And now another duty which has been casted upon the chartered accountants is that if there has been a change in the method of accounting, then you have to quantify the impact of that change on the profits of the organization you are doing the accounts, the audit of the organization. So if there is a change, you have to figure out as to what would have been the profit if it would have been following the previous year's method of accounting, and in this year if there has been a change, then because of change what impact it has made on the profit of the entity. That has to be worked out. Then we all know that the income computation and disclosure standards have been notified by the income tax department as ICDS 1 to ICDS 10. We have to again point out as to if these computation ICDS have any impact on the profitability, as the institute has come out with the publication that these accounting standards are basically revenue neutral, so they don't generally have any basic impact. Then we have to point out the disclosures as per the ICDS which are there. Certain ICDS, friends, have disclosure requirements. So those disclosure requirements you have to mention here at clause 13. Now clause 14, the method of accounting for valuation of closing stock has to be mentioned. Clause 14b is important. As to 145A, section 145A is there in the Income Tax Act, which says that sales and purchases, stocks have all to be valued and come up with tax, duty, cess, etc., which have been paid in bringing them to the present location and condition. So if any, so and the institute had come up previously with a guidance note of inclusive method of accounting and exclusive method of accounting. So if the auditee is following the inclusive method of accounting, then you have to mention the impact. And if he's following the exclusive method of accounting, then basically it's a revenue neutral game here. Then as I said, that the tax audit has becoming more of a transactional based audit. So at clause 15, we have to point out if a capital asset has been converted in a stock in trade during the year, then these particulars from A to D have to be mentioned, which all can be the cases where a capital asset is converted into stock in trade, friends. To my mind, the classical and the simplest example and the most convenient example is of a real estate builder, where a person who's holding a certain piece of land as a capital asset now starts doing real estate business. He becomes a builder. At many places we see that there are old factories, old mills which are there. They are holding those lands as fixed assets, part of fixed assets, and then with the advent of and with the business of real estate, they feel that the real estate business is very lucrative. They become builders. So when an old factory, old industry, they start a division of real estate transactions, then at times they convert their real estate land, buildings which are there held as capital asset into stock in trade. There you have to mention it in clause 15. Clause 16, dear friends, as we all know, is amounts not credited to the profit and loss account being. So the very important terminology used in clause 16 is amounts not credited to the profit and loss account, being section falling in the scope of section 28. As we all know, when we work out the profit and gains from business and profession, section 28 says that if anything has been received in kind for an obligation, then that would be the income of the particular assessee. So if it has not been credited to the profit and loss account, then you have to mention. Because friends, keep also in mind that there might be a situation where the person has credited it into the profit and loss account. There you show it again here. So please don't do that error. Why? Because as per section 143(1) of the Income Tax Act, now the CPC has been empowered. CPC has been empowered to make necessary correction in the processing of return, whereby the tax audit figures, if they are not taken care of in the tax or in the computation of income of while filing the return, then those adjustments can be done up over here. I think the question answers we will be taking up later on, as the organizers might feel. I don't know why these red lines have been drawn up. The pro forma credit drawbacks, duty drawbacks, etc., if they are there, they have to be pointed out by us if they have been admitted by the relevant authorities and have not been credited to the profit and loss account. If they have been credited to the profit and loss account, then there is no need to show it over here. Escalation claims accepted during the previous year, but their impact has not been received, then that has to be shown. Any other items of income or capital receipts which are there have to be mentioned in clause 16 here. Now coming to clause 17, as we all know that in the Income Tax Act, section 50C is there, and for business assets, section 43CA is there, which says that if any immovable property being land or building is being sold lower than the stamp duty valuation, then these amounts have to be mentioned over here as to if there is any difference between their valuation, then these differences have to be mentioned by the tax auditor over here. Now, subclause CA, CB, CC have been newly inserted this year by the 8th Amendment rules, which are in relation to adjustment being made to the written down value, where provisions of section 115 BAC, BAD are to be effected, whereby the depreciation has to be adjusted, where the assessees being companies follow 15% of treatment or follow 22% of the beneficial tax provision tax rates, then the adjustment of WDV has to take place. Then we have, for depreciation purposes, block of assets, the central value added taxes which have been there, the GST which has been there, whether it has been reduced or not, any subsidy or grant which has been received, this has to be reduced from the cost of the plant and machinery or the asset in terms of section 43 subsection 5, which says that the cost which has been reimbursed by the government or any authority as subsidy or grant, that has to be reduced from the cost, and on that reduced cost, then the depreciation has to be allowed. So you as tax auditor have to figure out these figures and bring out in the tax audit report. Now section clause 19 is there, which speaks of admissible sections, whereby these sections are there, whereby the accelerated or more amounts of deductions are to be allowed in computing the business income. These are from section 32 to 35 CD, DD 35E, whereby at places 125% or 150% of the amount spent are held to be deductible as from the incomes. Now come clause 20A, which is any sum paid to an employee as bonus or commission for services rendered, where such sum was otherwise payable to him as profit or dividends. So this is not, students, you have to understand it very clearly. This is not the normal bonus which we are paying as per the Payment of Bonus Act. This is if any bonus or commission is being paid to him as part of profit, then that has to be mentioned, because that would be not allowable as an expenditure here. What is to be paid as payment under Payment of Bonus Act, that is to be decided by you, and that is to be reported by you under clause 43B. I'll be taking it up a bit later. There that has to be mentioned, but where this bonus is kind of a profit which is being given to the employee, then that has to be mentioned over there. Then clause 20B says, as we all know, funds and contributions which we receive from employees towards PF, ESI, etc., they have to be mentioned over here. Now, since this year, the amendment in the Income Tax Act has taken place, whereby the amounts which we receive as employee as PF and ESI, so if they are not paid by the due date prescribed under those sections, then that total amount would be disallowed. So please be very careful when you curl out this amount, so that correct amount only of the employees contribution is mentioned. Contribution received from employees. So only the amount which you receive from employees, that only should be mentioned over here, not the employer contribution, not the administrative charges, etc. Maybe at times we have seen that the articles bring out and paste the whole amount as per the challan of the PF. No, because the entire amount from challan has not to be quoted over here. Only the employee share has to be quoted over here, because if there is a slightest delay of even one single day, then as per this draconian law which has come up from this year, this entire amount would be disallowed by the tax authorities in the computation of income. Then we have to mention certain disallowances as per clause 21A, which are in the nature of capital expenditures which have been debited to the profit and loss account. Again, I'm using the words amounts debited to the profit and loss account. So if certain amounts are not debited to the profit and loss account and are debited, say, somewhere else, maybe to the proprietor's capital account, or in a partnership firm to the partnership's capital account, then they need not to be reported over here. Because at times we have seen in audits of small concerns and proprietorship and partnership concerns, personal expenditures being on car, etc., telephone, car, etc., they are so moto disallowed by the assessee, then those need not to be disallowed over here or pointed out over here, because they are not debited to the profit and loss account. Advertisement in a political party, expenditure for entrance and subscription at clubs, expenditure by way of any penalty, etc., they all are disallowable expenditure under the Income Tax Act, and they have to be mentioned by the tax auditor over here. Now moving on to again a very important clause of inadmissibility. Inadmissibility under section 40A. The inadmissibility under section 40A, as we all know, relates to certain few subclauses. Subclause 1 is there, subclause 2 is there, where the tax has not been deducted on certain payments. Then we have to figure out those payments and we have to mention it over here. Tax on payments has been deducted but not paid during the previous year or before the date specified for filing of the return, then that has to be mentioned over here. Then payments under section 40A IA, where TDS has not been done, it has to be mentioned. Not paid before filing of return, that has to be mentioned in clause B. So these are the transactions when we do the audit that you have to point out in the working papers to your partner, to the chartered accountant who is doing the audit, so that when the audit report is finalized, these figures are worked out and mentioned in the audit report clearly. Because as we all understand that the chartered accountants have to certify the correctness of this form 3CD, and if any errors are there, then we cannot escape from our liabilities. Because the Income Tax Act also can punish a chartered accountant, can have the disciplinary action against the chartered accountant for omission of these mistakes, and which may be very, very grave. Moving to other clause, clause C, when there is any disallowance, that is the remuneration is inadmissible, then only these figures have to be mentioned over here. Why I'm harping on this issue again and again of inadmissibility? Because as per section 143(1), if any figures have been mentioned over here by the tax auditor, then and in the computation the auditee or the client does not make a disallowance, then automatically the figures from this tax audit report, the disallowance while processing the return would be made by the CPC, and then a tax liability would be fixed on the assessee concerned. So you have to be very, very careful that the correct disallowances, correct amounts are mentioned in the tax audit report. Nothing which is awkward or which makes you awkward is mentioned, or nothing which is wrong has to be mentioned. Subclause D deals with 48.3. As we all know, 48.3 cash payments, disallowances have to be done. You have to read Rule 6DD, because Rule 6DD carves out certain exceptions as to these, if these are the circumstances, if these are the provisions, rules, then those expenditures would not be disallowed under section 48.3, whereby maybe the payment is made to an agriculturist, maybe the payment is made on a banking holiday, maybe the payment is made where a village or a place is not served by bank, which is not in vogue these days, and certain other few exceptions are there. So if it is coming under the Rule 6DD exceptions, then only the benefit can be given to the client, otherwise not. Subclause B reads again with the same thing. Then coming to clause 22, coming further to clause E, F, G, H, these are all in relation to the amounts which are disallowable under section 48.7, 48.9. Any contingent liability, if he has credited in these books, in his books of accounts, debited in the profit and loss account, if any contingent liability, then that has to be pointed out by you. Any inadmissible deduction under section 14A, which deals with earning tax-free income expenditure incurred on earning tax-free income. Then amount inadmissible under proviso to section 3613. 3613, friends, as we all know, deals with interest paid on fixed assets or capital assets before the date they are put to use. So if any interest is paid, then that interest has to be capitalized and it cannot be claimed in the profit and loss account. So you as chartered accountant has to certify and figure out that interest which has to be disallowed as per the proviso to section 3613. In today's webinar, we have the presence of Honorable Justice Madam over here. And I think Madam would appreciate and would see that what onerous and what tremendous duty has been casted by the Income Tax Department on the chartered accountant when he fills up these figures in Form 3CD. And that is the hard labor which we have to put in, so that correct figures are pointed out by us, as a very, very big responsibility is there on our shoulders, ma'am. Then we have clause 22, whereby the interest which is admissible as per the provisions of section 23 of the Micro, Small, Medium Enterprise Development Act. Students, you all know that this MESMED Act is there, which was enacted in 2006. At times, it is now causing a bit of problem to the MSME sector, whereby if the MSME person is there who has supplied you any goods or services to a particular person, and he has, before supplying or at the time of supply, stated that he is covered under MSME Act and he is duly registered under the MSME Act, then as per this particular act, he has to be paid within a period of 45 days. If he has not been paid within a period of 45 days, then he can collect interest from you, which is thrice the RBI rate. So somewhere around 18% interest this person can charge from you if you delay payment beyond 45 days. Even though your payment terms, normal payment terms might be 60 days or 90 days. And especially in these COVID days, last year, because of COVID, many payments were delayed by the industrialists, by the industries, even by the MSME sector. So if there are disallowances which are there, then they have to be pointed out by the tax auditor here. Particulars of payment made to section people covered under section 48(2)(b). You have to read the definition of relative. कि relative की definition क्या है या specified persons की definition क्या है, and then these payments have to be mentioned over here as to what payments have been made by the auditee during the year, because the assessing officer has to see the reasonability of expenditures which you have incurred on persons specified and persons covered by this definition of section 48(2). Then amount deemed to be profit or gains under section 32 AC, AD or 33 AC, these all have to be mentioned. Amount chargeable to tax under section 41, which is for remission of a trading liability. So if a trading liability has been remitted by a particular person, remission has taken place during a year, then you as tax auditor have to mention that figure over here. Then a very important clause comes up, clause 26. Friends, as we all know, section 43(b) is there, which says that if there are any amounts which are payable for clause A, B, C, D, E, F, G, whereby any tax duty cess is there, any PF, ESI amounts are there, any amounts to banks are there, NBFCs is there, any payment to railways for railway sliding is there, then if those amounts are not paid during the year, that is by 31st of March, suppose कोई tax है, आपका GST है, which you have debited in your books of accounts, और वो आपने pay नहीं किया है, you have created a liability. Or maybe house tax is there, you have created a liability. So when you create a liability, when you debit in your books of accounts, तो आप उस amount का tax computation में benefit ले लेते हैं. You reduce it from your taxable income, from the profits. The government says, the Income Tax Act says, but at the same time you have not paid to the government. Then there is a double jeopardy for the government. एक तो उनको tax cess नहीं मिला, एक में भी PF नहीं मिला उनको, और दूसरा आपने उसका tax benefit भी ले लिया. So they say that if certain types of these expenditures are there and you don't pay these expenditures before you file the income tax return, maybe in the month of July or in the month of September, then if you have not paid these amounts to the government, then those amounts would not be allowed in computing the income for that year. Now, it is further subdivided into clause A and clause B. Clause A is for the previous year's disallowances which have taken place and you have paid in this year and are not paid, and amount incurred in the previous year and paid before the due date of furnishing of return or not paid. So these all have to be mentioned by the tax auditor at clause 26, which is very, very important clause, and many a times we falter to bring out the correct figure over here. Then clause 27A is there, which was for central value added tax. Since it is for central value added tax, which is not there now, which was there in VAT regime, it is not of much importance. Even the latest paper which has been brought out by the institute in 2018 is silent of whether for GST purposes this amount has to be shown or not. So my personal opinion would be that for GST purposes, don't bring in this amount, because the new research paper which has been published by the institute also says that this need not to be mentioned for GST purposes. Then any income or expenditure where it relates to the prior period year, if it has been debited, has to be mentioned over here. This clause, friends and students, you know, would be only applicable where the assessee or the auditee is following mercantile system of accounting. Because for cash system of accounting, it would not be applicable since there would not be any prior period income or expenditure. Then as I said initially, clause 56(2)(7)(a) is to be mentioned. If the assessee has received any shares from a company for inadequate consideration, you have to mention it over here. Clause 29, 56(2)(7)(b) is there, where the assessee receives any consideration for issues of shares exceeding the fair market value जहां शेयर प्रीमियम आपने काफी ज्यादा चार्ज कर लिया है, then that has to be mentioned over here by the tax auditor. In clause 29A, we have to mention the amounts which are chargeable to income as income from other sources under section 56 to 9 and 56 to 10. So these two again are very important. 56 to 10, dear friends, is very important, whereby any amount is received without consideration or without any adequate consideration, then this has to be mentioned over in clause 29B. Clause 30 basically is redundant because now in these days no hundi loans are there, so I would not be touching upon it. Clause 30A again has been suspended for this year for transfer pricing, so it would not be of use over here. Clause 36, clause 31 again, friends, is important, whereby as you have done the audits last year, you would have seen that clause 31, clause 43B, etc. These all are generally reported in each and every tax audit report. So it says of where any particulars of loan or deposit exceeding rupees 20,000, which the limit is there, under section 269 SS is there, then these particulars have to be mentioned. It does not so moto lead to disallowances, but it's just a clause whereby you have to point out these things to the income tax department so that they, when doing the assessments, they take the future course of action. Any sum specified whereby you understand exceeding the limits under section 269 SS is there, under the Income Tax Act, any payment for purchase of property or sale of property, you cannot make any cash payment exceeding rupees 20,000, either in parts or together. So that has to be pointed out by the tax auditor. Then in BA 269 ST, whereby in a single day or transaction, 2 lakh of rupees or more cash transaction is there, those have to be mentioned by the tax auditor. Clause BB again, 269 ST is there, which you have to be mentioned. 269 ST is there, 269 ST. Then this comes to clause 260, section 269T, where a repayment of loan is there, otherwise than a bank draft, not in the name of the person concerned. That also has to be mentioned by the tax auditor. You have to mention the name, address, PAN number, and the repayment done, and whether the repayment was by other than by account paid check or not, you have to mention it over here. Now coming to clause 32, friends. Clause 32 deals with that US tax auditor have to mention the amount of brought forward losses or depreciation if they are there. So that means in the previous years, if any depreciation loss is there or business loss is there, then this chart is mentioned over here. You as tax auditor have to mention these figures. Why? The government wants, the income tax department wants that these figures, when the assessee is claiming in his return, so and his accounts are being audited, then the chartered accountant would certify their correctness, and this certification of correctness is to be taken good by the income tax department. So friends, understand the faith the government has on the profession of chartered accountancy with us. This is the faith which the government has on us, that the entire accounts, entire disallowances under the Income Tax Act, they are worked out in this form 3CD and pointed out to the government. So when we do the audit, we have to be very, very careful, and we have to repose the full faith the government has, and we have to always, कहते हैं ना, खरा उतरना है, खरा सोना उतरना है हमको. Always do that while doing our professional responsibilities. Then this is section 79, whereby a private limited company or a public limited company in which public is not interested, whereby more than 51% change in shareholding is there, then prior period losses are not to be carried forward. So you as tax auditor have to mention it fact over there. Then speculative loss under section 73, if it is there, then in case of companies, it has to be mentioned over here because that is not allowable for companies. In clause D, you have 73A. 73A losses deals with 35 AD, whereby in 35 AD specified businesses are there. So those losses which are there, which have to be adjusted this year, have to be mentioned by the tax auditor. Then coming down to section 33, clause 33, admissible deductions under chapter 6A. That means all the deductions in section 6A, that is dealing with section 80 and above, 80, 80C, 80D, 80G, 80IA, 80IB, 80IBA, etc., 80IC, etc. They all have to be mentioned by the tax auditor in this clause 33 while finalizing the tax audit report. Clause 34, again, friends, is very voluminous because while filling this form, lot of help, lot of labor is required because we have to work out the entire financial statements of the auditee, and we have to mention his TAN number. We have to mention the sections under which he has deducted the tax, the nature of payment, the total amount of payment or receipts in the nature specified. अगर contract payment है तो total payment which have been done, and the total payments on which tax was required to be deducted has to be mentioned in column 5. In column 6, the amount on which tax was deducted at the specified rate has to be mentioned, और उस specified rate से कितना amount collect हुआ, इस column 7 में आना है. Column 8 में अगर उसके पास lower deduction का certificate है, so those figures have to fall in column 8. Column 9 met amount collected, and then amount which has not been deposited to the government exchequer in column 10. So again, a laborious exercise which has to be done over here while for bringing out these figures of tax deducted at source. Then at clause B, we have to mention when all the returns have been furnished, the form which have been furnished, their due dates, and if they have been furnished late, then if any interest, etc., has been paid by the assessee, that has to be mentioned in this subclause C. Clause 35, friends, as you all know, is also important, as we tax auditors have to, it has been categorized into two categories, one for trading concern and clause B for manufacturing concern. So I think the red lines have been nicely mentioned over here, and I'm trying to use the red lines which have been inadvertently drawn by someone. So the trading concern has to mention the principal items of goods traded. So you have to see if the stock statements are there, the stock registers are being maintained by the assessee, then figures from the stock statements, stock registers have to fill up these figures for here. Again, students understand one point here, that many a times we see small auditees, they don't furnish the stock registers to us for auditing. Now, tell them that under GST law, maintenance of stock records is of utmost importance. So, under GST law, ऐसा तो नहीं है that under GST law they are showing the stock statements, stock registers, and when you are doing the tax audit, they say that stock registers are not maintained. If that is the situation, then you have to advise your client, you have to advise the auditee that he has to be very, very careful that what all information he gives for GST has to be given over here. If your auditee has taken a bank loan, then even for the bank, the stock statements are filed every month. So if the stock statements are filed every month, he would be maintaining a stock register. So just don't only believe the auditee, but also see the circumstances under which the audit is being conducted, the circumstances under which the client is doing his business. After understanding, and then if you feel that the stock registers are not maintained, then you can mention a fact over here. In case of manufacturing concern, you have to show the quantitative details of the entire list of raw material, yield of finished product, percentage of finished yield, shortages, etc. have to be mentioned. Finished goods, which was the opening stock, what purchases were there, what quantities manufactured and sold, has all to be mentioned by you in the tax audit report over here. Clause 36A deals with deemed dividend under section 222E. This has to be mentioned over here. If any company, if a person is there, then he has received any amount as in the nature of deemed dividend, any amount of as loan or advances, then that partakes the character of deemed dividend, then that has to be mentioned by the tax auditor over here. Where the central government has prescribed for the tax audit to be carried out, there if any disqualification etc. has been mentioned, you have to mention it over here. At clause 38, the audit conducted by the Central Excise Act under the Central Excise Act, that is for GST also, then that has to be mentioned over here. But to my knowledge and as per our practice over here, the GST audit team never furnishes you the tax audit, their audit report. So generally this goes not applicable, or that the audit was conducted by the GST team, but they have not given you any disqualifications or disagreements. Then clause 40 is important, whereby the ratios are to be mentioned: the gross profit ratio, net profit ratio, stock turnover ratio, and material consumed. Friends, stock turnover ratio and material consumed turnover ratio is very, very important in the financial analysis of a particular account, because you have to see what is the stock turnover for a particular trade, and in that industry, say maybe you are doing the audit of a jeweler in a trading concern, then what stock turnover ratios is there, how much stock he maintains for what period. So that ratio you should advise your client whether it is too high or too low, so that it gives an indication or indicator to the income tax department and raises a red flag for them to see the accounts very importantly. Then clause 41, any old demands are there, have to be mentioned over here. Clause 42, whereby the specified transactions, financial transactions, those returns which are to be reported by the entity, they have been furnished in due time or not. This again, the tax auditor has to certify and mention over here. Then clause 43, parent reporting entity, which is not relevant. Clause 44, again, this year has been kept in abeyance when GST figures have to be mentioned. So this was the tax audit report in Form 3CD, which was there. Now coming back to the presentation, the analysis of this clause by clause of Form 3CD I have done, and I have done it basically with a view that the students who are there, they are able to understand as to what work they have to do while doing the audit. अगर आप वो संवाद ध्यान रखें अर्जुन का, जब अर्जुन को तीर चलाना था और उन्होंने उस मछली की आंख पे ही निशाना साधा, so also you have to be there, you have to be, because while doing the audit of the auditee, आपको ध्यान रखना है स्टूडेंट ऑफ चार्टर्ड अकाउंटेंसी कि हमको 3CD ऑडिट रिपोर्ट में क्या क्या मेंशन करना है. तो जब आप वाउचिंग कर रहे हैं अकाउंट्स की, ऑडिट कर रहे हैं, देख रहे हैं एक एक वाउचर, कहीं कैश पेमेंट 11,000 रुपए का हो रहा है, डोंट जस्ट डू दी ऑडिट. आपको देखना है कहीं 11,000 का कैश पेमेंट हो गया, इट विल हिट माय क्लॉज 26. सो आपको तुरंत अपने वर्किंग पेपर्स में उसको नोट करना है, एंड ऑडिट में जब फाइनल करेंगे तो उसको मेंशन करना है. वहां कहीं 43B में टैक्स गवर्नमेंट स्टैट्यूटरी पेमेंट्स हो रहे हैं, वो डिसअलाउ होने हैं, तो आपको मेंशन करना है उसको. सेक्शन 56 का कहीं इन्फ्रिंजमेंट हो रहा है या कहीं अमाउंट रिसीव हो रहा है फॉर इनएडिक्वेट कंसिडरेशन, आपको अपने वर्किंग पेपर्स में मेंशन करना है सो दैट हम उसको ऑडिट रिपोर्ट में मेंशन कर सकें. For us as chartered accountants, students, you are our eyes and ears. हमको बहुत सी बार अपने से ज्यादा भरोसा आपके ऊपर होता है, because of paucity of time, because of so many factors, हम ऑडिटी के अकाउंट्स में इन डेप्थ इतना नहीं जाते जितना आप जाते हैं. So we repose much faith on you when you do the audit, the faith which the government reposes on us. तो आपको भी देखना है कि आप जब अकाउंट्स का ऑडिट कर रहे हैं तो प्रॉपरली करें और सारे फिगर्स को ढंग से वर्कआउट करें. Now coming back to the presentation, the recent changes in ITR are there. As we all know, I think I'm reaching the closing time of 6 o'clock, so I'll try to finish these few slides more quickly. Recent changes in ITR, as we all know, there are 7 ITRs. ITR 1, Sahaj, for people having incomes below 50 lakh of rupees, only income from salary, one house property, and interest income only, agriculture income only up to rupees 5,000. तो सहज रिटर्न है, सिंगल पेज या छोटा सा 3-4 पेज का रिटर्न है, आप इजीली फाइल कर सकते हैं इन लोगों के लिए. फॉर ITR 2, बेसिकली ITR 2 उन लोगों के लिए है, those people who are not having any business or professional income, having salary income, rental income, capital gains, income from other sources, तो उनको ITR 2 भरना है. ITR 3 is only for individuals having income from business or profession. ये ITR 1 और 2 में business और profession की income नहीं थी, ITR 3 में business और profession की income है, तो उन लोगों को ITR 3 फाइल करना है. Then ITR 4, again the government has brought ITR 4, again small ITR 4 Sugam, which they have brought, again with for a very limited number of people, being individual HUF firms other than LLPs, having income below 50 lakh of rupees, and also which are covered under section 44AD and 44ADA. ITR 5 is basically for non-individuals, non-HUFs, non-companies, and people other than ITR filing ITR 7. That is ITR for partnership firms, for association of persons, for body of individuals. They have to file ITR 5. ITR 6 and ITR 7 for companies. ITR 6 is to be filed. Companies, if they are claiming exemption under section 11, then they have to file ITR 7. And ITR 7, as we all know, is for all those people who are taking the benefits of section 1023C or section 11 and 12. That is, they are required to furnish their returns of income under section 139A, 139(4)A, 4C, or 4D. So these all have to file these ITRs in these separate ITRs. Generally, in our offices, what is happening, as these students would be knowing, that generally mostly the chartered accountants are using softwares. So when you're using the software and when you punch in the data, the software automatically decides which ITR has to be filed. So basically, it is not much of a relevance because the software itself picks up the ITR, the correct ITR. So that is more of taken care of by the software. Now coming to the important points in filing the ITRs and the ITR forms. If the organizers have time and I have time at my disposal of maybe some 10-15 minutes more, then I can take up any of the ITR form and show in the nitty-gritties of these forms. So if anyone is there, Abhishek Pandey ji or anyone is there, if they can guide me, because although 6 o'clock is there, 3 minutes are there, and we have to see the new website also. Chali, I'll try to figure it out in just 5-10 minutes.
extend kar sakte apne.
Sure. Thank you, Vikas ji. So I'll just figure it out and show you the ITR 5. because ITR 3 is somewhat more just like ITR 5 itself. So that is why I'm trying to take ITR 5. The general part is not of much relevance or not of any great problem for us. When the notices comes under section 148 or 153 CA or 153 C, you have to take in the relevant portion, relevant component over there. What important things I wanted to show over here is that if you are a partner in the firm, you have to take it over here. The huge amount of information this income tax return is taking out of you. Whether you have shares of unlisted companies, that has to be clearly mentioned over here. Whether during the year turnover exceeded 1 crore of rupees but was less than 10 crore of rupees, that has to be mentioned over here. The tax audit report has to be mentioned over here. You were director anywhere, those things have to be mentioned, those facts have to be mentioned over here. You were member of any AOP, etc., those facts have to be mentioned. You were partner in any firm, again under section clause E has to be mentioned over here. You were beneficiary in any of the business or a trust or under a will as per section 160, those facts also have to be mentioned over here. Then we come down to the balance sheet. Part A, balance sheet of the particular assessee has to be filled up. Friends, in the case of an individual, when we are doing the audit, so this particular return in ITR form 3 specifically says here that only the business balance sheet has to be filled up, not his personal balance sheet to be filled up. So if assessee is maintaining a personal balance sheet also and a business balance sheet also, then only the business balance sheet has to be fed up over here, not the personal balance sheet. So this balance sheet has to be filled up over here. Then we have the manufacturing account, the trading account has to be mentioned. The computation of income under the presumptive taxation schemes, those all different schemes are there, those have to be mentioned, and if they are following it, then certain parameters only are asked by the income tax department, they have to be mentioned. Now we come down to other incomes, mandatory to be filled where 44AB is taking place, because here then it matches this information in part OIE from your tax audit report, and then if there is any mismatch between these two figures, it throws up a red flag for maybe an adjustment under section 143(1) or for maybe further scrutiny, etc., etc. So you have to correctly fill up these forms. Generally these days in our offices, softwares are there which take care of any discrepancy over here from the return filed and from the tax audit report. These softwares generally do this work for us of matching. Then quantitative details, if you have mentioned it in the tax audit report, please mention it over here again. Don't leave this schedule to be filled up. Then you have the different schedules which have to be filled up in this return of income. Schedule HP is for income from house property, all those things, tenant name, tenant PAN number, his Aadhaar number, etc., etc., have to be mentioned. Friends, understand why the department is asking you the TAN number of the tenant. Because this information from your return, they might be using it while they scrutinize or while they correct, while they see the return of the tenant when he's showing the rent he has paid. So that cross verification of information is going to take place in near future. Computation of income from business. This schedule BP deals with the computation of business or professional income. All those sections and disallowances have to be mentioned. Depreciation chart is there. The different rates of depreciation for plant and machinery, etc., are mentioned. For land, building, other assets is mentioned. You have to correctly fill up these. Generally, the forms or the softwares do this job for us. Then we have expenditures on scientific research. This has to be mentioned. Then schedule CGs for capital gains as to when the capital gain arises to a particular assessee. Then whether it's short term or long term, then these figures have to be mentioned over here in this return of income. We have the deductions under section 54, etc., 54D, EC, 54G, GA from capital gains. Those deductions which are there, they all have to be mentioned over here in this return, so that correct processing takes place. Then this schedule is for set off of losses for capital gains. Then we have schedule 112A, where special rate tax is there for business trust, etc. Those amounts have to be mentioned. Then 115AD for non-residents, where non-residents are to pay tax at concessional rates in 112A. Then schedule OS for income from other sources. You have saving bank interest, FDR interest. All these are to be mentioned over here. If you have received any compensation for acquisition of land, then that has to be mentioned. Any 56 income is there, that has to be mentioned over here, like gifts, etc. from unrelated parties. Those all have to be mentioned over here. If any expenditure are to be claimed under section 57, they have to be deducted from here. Then we have this schedule CYA, that is for current year losses, brought forward losses, as was mentioned in the tax audit report. These brought forward losses have to be mentioned over here also. Carry forward losses, if any loss is there, then we are carrying it forward for the future years. It has to be mentioned over here. Effect of ICDS, which was there in the tax audit report, its effect and impact is mentioned over here. And because this schedule is then when we make the schedule for computation of business or profit income, then the impact of this schedule goes up and hit over there. Then deductions in the different sections, section 10AA, section 80G. 80G, as you all know, from 1st April 2021, online form has to be filled by the donee, so that the donor gets the proper deduction, and a particular form would be given to the donor, so that when he fills up this return, that information of donee automatically gets filled up in this ITR from the donor. Deduction under section 80GA, 35, etc. 80IA are government incentives which have been allowed to us. So if any incentive or benefits are there, you have to mention it over here. 80IB, again, deductions for different type of business undertakings at different places. Those deductions have to be mentioned. 80IC, 80IE, 80P. Then we have chapter 6A deductions. All those 80G and 80C, etc. deductions have to be mentioned by the auditee over here. Tax credit under AMT or under MAT, they both have to come up over here. As we all know, there is a particular time period for tax credit to be availed. That has to be clearly seen and mentioned by you while filing the return of income. Then exempt incomes, if any are there, it has to be filled up in schedule EI for exempt incomes. For pass-through incomes, these days another important investment opportunities are coming there by way of business trusts or investment funds, whereby pass-through instruments are there, whereby they collect funds from you and may be invested in a business trust, maybe in real estate or somewhere else, and the income which they earn from there and the units which you hold, they give you those incomes, and those incomes are then passed through in your returns of income. We have the foreign incomes, the deduction under section 1990A of foreign taxes paid by us in the foreign countries. Then we have another very important schedule, schedule FA. It is detail of foreign assets and income from any sources which are outside India. So all those things have to be mentioned by you in the return of income of the assessee. This has to be necessarily filled up. Friends, always keep in mind that the Black Money Act is also there. And the Black Money Act has a very long period whereby the returns can be taken up for scrutiny. So if any misinformation or wrong information or incomplete information has been filled up in Schedule FA, it can create a lot of problem in days to come and in times to come. Income regarding turnover for GST, which is there. Then we have the computational part as to how the income is computed. It's basically arithmetic from all the schedules that comes up. The tax liability is there, how the tax liability is worked out, the details of taxes paid, the details of your bank accounts, where you want it, the tax payments being advanced tax or self-assessment. Now, this is important, TDS. For TDS, these columns have been recently added, whereby TDS under section 194N, you will have the credit of section 194N in the year where TDS has been deducted. Because as per the Income Tax Act, you can claim the benefit of TDS deducted only in the year when you show the income. So 194N is for cash withdrawal, TDS on cash withdrawals. So that does not represent or relate to any particular income. So there they say that you can claim it in the year in which it has been deducted. So, and then the verification part is important, that whatever you have mentioned is complete and true. And if anything is false, you can lead to penal provisions under section 276 of the Income Tax Act. So this was the ITR which was there. Now coming back to the presentation, I think last slide would be there. The recent developments of the Income Tax Department. As we all know, the portal is shut down for maintenance, or rather changeover transition is there from 1st June to 7th of June. Tomorrow we should be seeing a new income tax website at the URL incometax.gov.in. Here the India word has been dispensed with and a new URL has been created, whereby it would be launched tomorrow, and which would provide a modern and a seamless experience, whereby you should be able to have a better income tax website. Immediate processing of income tax returns. Friends, as we all know, last year itself, within 24 hours, the returns were processed by the Income Tax Department. Never ever in my professional life of 25 years, I've seen that the returns were processed in less than 24 hours. Last year, returns were processed in 24 hours. And with the new website, the government is saying that the returns would be processed then and there itself. That means आपने return file किया, वहां से process हो गया उसका, जो भी errors हुए, जो adjustments हुए, उसने निकाल दिए, and maybe in a matter of a few days, 2 or 3 days, you might even get the interest, you might even get the refund of your income tax excess paid, which saves the government of the interest cost. So it is a very nice gesture on the part of the government to have a faster processing of your returns. Single dashboard would be there, wherein all income tax network related information, pending demands, your e-portal, e-proceedings, pending appeals, pending assessment things, pending grievances, etc. would be shown on a single dashboard. Offline, online, return preparation softwares would be there, so you can prepare your return yourself. But yes, again, the help of a chartered accountant would be required when certain things complex are there. As Abhishek ji had said, that even Einstein had said that income tax is very problematic and very cumbersome for him. So I feel that the work for chartered accountants would not go down. We would be required to fill the income tax returns. A new call center is to be come up. Mobile app would be there, which by using the mobile app, you would be able to access the income tax website and the income tax department and have your problems in a faceless manner. Online payment of taxes would be through the new portal. Today we have all payments of income tax through online payment, but that is through the NSDL portal. Now they are saying from this new portal itself, they would be having this online payment of taxes. The latest press information of yesterday said that they would be deferring this income tax payment to 18th of July, because as we all know, the first installment has to be paid by 15th of June. Sorry, 18th of June. The first advance tax installment has to be paid by 15th of June. So they would not be disturbing the first advance tax installment, because many softwares and APIs would be disturbed. So after 15th of June, by 18th, the new portal would be having online payment facility. Then definitely, as the Honorable Finance Minister had said in the previous budget speeches, that your Form 26AS would be there updated, wherein all your income tax transactions would be shown in this Form 26AS. Last year, you had seen the GST turnover was there. This year, you will see bank FDRs, what all FDRs have been made. STF information would all come up over here. If you have withdrawn cash from the bank, it will come up over here. Deposited cash over a certain limit of 50 lakh of rupees, that would come up. So all the financial information of a assessee would be shown in his 26AS, so that when he files a return of income, and when you as student of chartered accountancy, when you make a return of income for a particular client, please see Form 26AS, so that all that information is explained in his return of income, and then you make a proper return of income. With these words, I think I am coming to the last slide, which is a big thank you to you all. And thanks everyone for having listening me on this topic. And ma'am, I would like to let you know that this photograph of Taj Mahal from the city of love, where I am from, has been clicked by me during the lockdown period. That is why you are not seeing any person or any visitor over here. And this is the monument of love which I had from Agra for all my dear students throughout the country who are watching this webinar today. Thank you very much. If we have any questions, I would be delighted.
I have really enjoyed your entire program. I was very inquisitive to figure out and understand. And I must say that it is a very difficult task for chartered accountants. And, our system, our government, our constitution has given you a lot of responsibility to carry out.
Thank you, ma'am. Just wanted to show you that while filling the tax audit report, how faith the government has on us. You would have seen clause by clause as to all those disallowances which are there. We at times sit into the shoes of the assessing officer while doing the audit, and then figure out those figures and help the government in collecting the revenue for the government. So that is the task which
in the court proceedings, we gave lot of credence to a certificate issued by a chartered accountant.
Thanks, madam.
Lot of credit is given, and we do not disturb it. Never.
Yeah, definitely.
I would like to quit and let there be a question answer session for you.
Thank you, ma'am. Thank you so much. Thank you so much for your gracious presence. Thank you so much.
Thank you, ma'am, for your time.
My pleasure. Okay.
So the questions are there. They can be asked in the chat box or in the question answer box, and or the students can live take the questions or ask the questions from me if they are there, and then I'll hand over the mic to the organizers, Harpreet or Vikas ji or whatsoever, as the program would progress.
If there is any question, you can even raise your hand in the chat box. I guess there are no questions.
Atul Jain sir, Sikasa chairman of Ajmer branch, to please take up the question answer round.
थैंक यू अर्पित। अभी तक तो कोई क्वेश्चंस आए नहीं है मेरे पास जो मैं
So we have 3 hands raised in the chat box. R.K. Agarwal, Mamta Sahni, and Pankaj Vaishya, CA Pankaj Vaishya.
You can ask the questions online directly, I suppose, if those people are wanting to ask other questions.
आर.के. अग्रवाल, आप अनम्यूट होके आप अपना क्वेश्चन पूछ सकते हैं डायरेक्ट। ममता सैनी, आप अनम्यूट करके क्वेश्चन पूछ सकते हैं।
The panelists, I think they cannot unmute themselves. Vikas, if you can please add them to the panel, they will be able to ask the questions.
I can't see any hands raised. Harpreet, I am promoting to you. I have also made you the co-host, Harpreet. Now you can also do it.
Yes, sir.
I have one question in the chat box. It is, if any partner gets interest and remuneration more than 1 crore, then tax audit applicable or not? See, the issue is that you are saying that if a partner gets interest and remuneration only above 1 crore of rupees, then is the tax audit necessary? For that purposes, see what the section particular says and the guidance note says, that this amount would be taxable to him as business profit. No doubt about it. Section 4480 says of gross receipts and turnover from his business. This is basically not from his business, but it is, if you see the Partnership Act treats remuneration and interest as distribution of profits to the partner. It is only the Income Tax Act which segregates this interest and remuneration as taxable under the head of profit and gains from business for a particular person. But it does not fall into the category of turnover. So when it does not fall into the category of turnover, then tax audit simpliciter, where an assessee has only remuneration and interest more than 1 crore of rupees, would not be required.
R.K. Agarwal, Mamta Sahni, and Nityashri, I have promoted you to the panel. Please ask your question. You can unmute yourself and you can ask the question.
One more question is come, whether from Mamta Sahni, whether GST to be added for taking turnover for tax audit.
See, it depends upon the method of accounting which you are following. If you are having a exclusive method of accounting, that is that GST आप अपने profit and loss के अंदर नहीं लेके आ रहे, exclusive method है, that means you have a separate account for GST input and separate account for GST output, then it is not required. The guidance note also says so in para 4, I suppose. And if you are following inclusive method, whereby GST is added in your sales and GST is added in your expenditures, then definitely when it is part of your part of your sales, it would be added for your turnover tax audit purposes.
Sir, एक और क्वेश्चन है पंकज वैसे का कंटिन्यू है उसके लास्ट क्वेश्चन से, अगर पार्टनर क्लेम करता है एक्सपेंस ऑन इंटरेस्ट पेड ऑन लोन, अब क्या केस होगा, जो 1 करोड़ की टैक्स ऑडिट के लिए एप्लीकेबल है कि नहीं?
He says if partner have claim expense on interest paid on loan, then what is the position in above case? Sir, इस केस के अंदर partner, if he says that for bringing the capital in the firm, he has taken a loan from someone else and he's paying interest on that loan, then also it would not be a taxable turnover for him, because amount deductible would be there under section 28, that for income which is earned under section under the head profit and gain from business, out of that income only he is reducing the expenditures of interest which he has done. So also he would not be required to get the tax audit done if it is just a case of interest and remuneration. But I would twist this question to another query, that he might be having certain other proprietary business as well as getting some interest and remuneration. If that is there, then the proprietary business turnover alone would have to be seen, not this remuneration and interest would be seen. Only the proprietorship business turnover would be seen. If that exceeds a crore of rupees, then definitely tax audit would be required.
Sir,
Yes,
Mamta Sen,
TDS provision would not be applicable over here since he is not required to get the accounts audited.
now sir, Mamta Seni का एक और क्वेश्चन है, whether GST to be added for turnover under section 44 AD.
I've already answered that for 44 AD purposes, as per the institute guidance note, GST or indirect tax, if you are following exclusive system method of accounting, it has not to be added in your turnover.
Anyone have any question? Please ask. शायद अब किसी का है नहीं क्वेश्चन। हरप्रीत जी अब आप देखो अब क्या करना है आगे का, नेक्स्ट आगे करें फॉरवर्ड।
I think we should proceed further. I request Manjot Singh, committee member of Sikasa Jamshedpur, to please extend his vote of thanks.
Harpreet, I suppose Manjot is not there.
क्वेश्चन आ रहा था बार बार कि टर्नओवर के अंदर जीएसटी का अमाउंट लिया जाएगा कि नहीं लिया जाएगा. Specifically, if you see the institute guidance note at para 5.9, I'm specific at para 5.9. It is mentioned by the institute that if, however, excise duty or sales tax recovered are credited separately to excise duty or sale tax account, being separate accounts, and payment to authorities are debited to the same account, they would not be included in the turnover. So para 5.9 says that if you are following exclusive method, then it would not be added to your turnover. Harpreet, you can carry on. Thank you.
Harpreet, I suppose Manjot is not there. You do the vote of thanks.
Yeah, sure, sir. So I would take this opportunity to extend my heartiest vote of thanks to our dear speaker, Sri Dipendra Mohan sir, for such a wonderful and powerful webinar, sir. Thank you so much for your presence today. I also like to thank all the three Sikasa managing committee members and all the CAs who are present here with us in the webinar today. Thank you so much, everyone. And I would also like to thank all the students for participating and making this wonderful webinar a great success. Thank you so much to all. So we shall now close the webinar.
Thank you, sir.
Everyone for being a part.
Thank you everyone. Thank you everyone
thank you,
for
sir, everyone.
having me.
Thank you, sir.
Thank you, sir. Thank you.